Meantime, CPI data, as we mentioned, out tomorrow. The cost of the utility component has risen between 2 to 2.5% for the first 2 months of the year, well above the overall index. So what is driving these gains? Can the Fed keep these prices in check? Let's ask Sophie Karp of KeyBanc Capital Markets. Sophie, great to have you with us.
Hi, thank you for having me. So,
you make the point that the percentage that consumers actually spend on electricity is very small. It's 2 to 3%. But everybody uses electricity, obviously, and you open up the bill and you get that shock. So you actually have some pretty good news. You think that's going to normalize?
I think so. Yeah, I think it's very important to remember that there are two parts to your electricity bill, right? There's a part that pays for the grid, and there's a part that pays for the energy you consume. And the part that pays for the grid it's moving up very slowly, right? It's growing at rates below inflation historically, and we expect it to continue to grow at rates below inflation. On the other hand, the energy component, that's a lot more volatile, and that's driven by the commodity market. Utilities don't control that, and usually everybody in the market is just a price taker, right? And so I think that we've seen a quite substantial power prices increases in 2022, 2023 on the back of higher commodity pricing. And that's still working its way through the system. We still see some elevated levels of consumer bills from that. We do expect that to normalize and for the power prices to stabilize at these levels, which are very healthy right now. I think the generators are seeing pretty healthy margins, and to the extent we should see incremental demand, which is now currently projected from the AI and electrification, there should be a market response where more generation will be built to address that. So we don't actually expect to have some runaway, electricity price inflation over the long term.
So in terms of the percentage of that bill that comes from the spend on the grid and the upgrades, how should we think about that component when we're reading about the need to bury power lines, the fireproof poles, et cetera, like all of these things that just need to be done in order to bring this grid up to snuff for the new greener economy that will require so much more electricity?
Yeah, I think it's very highly dependent on the region where you're in, right? And obviously there are higher wildfire-prone regions like California, for example, or Colorado, where you might have higher need for that type of investment, and that will drive, rates slightly higher. But on average, I think that in the U.S. the rates are in the most of the country are pretty low as a percentage of annual income, right? So we've seen that most of the country is pretty green on this map, right? Even in the higher cost coastal areas. So the affordability is actually pretty decent. And what we like, right? We like to see affordability being high, because that allows utilities to make that necessary investment without putting undue pressure on utility bills. And as you have this potential load growth and growth in demand from AI or data centers or just electrification, that actually serves as an offset, because the rates are volumetric. So the more volumes of electricity is being sold into the grid, the less pressure there is on rates. So we like seeing regions with decent growth, be that from industrial, commercial customers or residential customers, such as like for example, growing regions like Texas.
And I would imagine in terms of utilities that need to raise money, tap the debt markets, higher rates are not a good thing. So can you sort of overlay all of this? Which are the utilities that you like the best in this environment?
Yeah, I think we really like Xcel Energy. This is a utility that got penalized substantially by the market this year on the back of the wildfire in Texas that we all know about. I think that in our estimate, the total property damage from the wildfire will be quite manageable. We think that they will be able to stay under the insurance coverage, right? And so the multi-billion market cap erasure that occurred there, we think is unwarranted. And otherwise, Xcel is an extremely well-run utility with high growth regions and high affordability in its service territories, which are Minnesota, Dakotas, Colorado, and Texas, right? If people are seeking exposure to the data center economy, people should pay attention to Dominion Energy, which is coming out of a major restructuring process and is covering Northern Virginia, which is a data center central in the U.S., as well as a Constellation Energy, which is the largest nuclear operator in the U.S. and is well positioned to capitalize on the heightened volatility in the energy markets, as well as demand for baseload clean power.